Let me tell you a story. Once upon a time, in the huge, sprawling kingdom of global finance, there lived a very mighty king. His name? King Dollar. And his power? Well, it was absolute. His castle, you see, was the envy of the entire world, built from the strongest, most reliable bricks you could ever imagine, U.S. treasuries. But like any good story, this one has a conflict. And right now, the very foundations of that castle are starting to show some serious cracks.
And here it is. This is the first tremor shaking the kingdom. Foreign governments are actually taking their bricks back, and they're not just doing it quietly, they're doing it at a pace that has everyone whispering. This isn't just a minor repair job, it's a huge sign that something fundamental is changing. Okay, so let's dive into Chapter 1, King Dollar's Mighty Castle. Because to really understand why these cracks are such a big deal, we first have to get why the castle was built this way in the first place. What makes it so special?
So these bricks, U.S. treasuries, they're not just any old bricks. They're seen as the bedrock of the entire global financial system. People call them the risk-free asset because they have the full backing and power of the U.S. economy, the world's largest. For decades, literally everyone, from other countries to huge investment funds, wanted these bricks to build their own financial houses on.
And just look at the sheer scale of the king's domain. The US dollar still makes up a whopping 58% of all the money that countries hold in reserve. That's a massive kingdom. But here's the thing. That number, it used to be over 70% just a couple of decades ago. So the borders of the kingdom, they're slowly but very surely shrinking.
And that shrinking, well, that brings us to the next part of our story. Welcome to Chapter 2, The Great Treasury Sell-Off. This is where some of the king's most important and trusted allies start quietly, brick by brick, taking their pieces out of the castle wall. $300 billion. Let that sink in for a second. In just the last 18 months, foreign holdings of U.S. treasuries have dropped by over $300 billion. Now, that is not just some routine portfolio adjustment. In the language of the kingdom, that's a massive vote of no confidence. And leading this retreat is a country that was once one of the castle's main architects, China. Look at this drop. Their holdings have absolutely plummeted, from a peak of over $1.3 trillion down to around $775 billion today. That's a staggering 40% reduction. They're actively taking the castle apart. But here's the thing. It's not just China. Japan, who has traditionally been the biggest foreign holder of U.S. debt, has been trimming its position. And even really close allies like Saudi Arabia and the UAE, who for years just automatically recycled their oil money back into treasuries, now they're looking for other places to put their wealth. This is a growing trend.
So the big question is, why? Why is everyone leaving at once? What on earth happened? Well, that brings us to Chapter 3, where we explore the geopolitical drama that acted as a massive global wake-up call.
It really all started back in 2022 with the conflict in Ukraine. King Dollar made a decision that sent a shockwave around the world. The U.S. froze around $300 billion of Russia's reserves. Now, this one act, which was meant to punish just one country, ended up sending a very different, unintended message to everybody else. And it triggered a record-breaking rush into other assets, especially gold. And the message that every other country heard was simple and, frankly, terrifying. Suddenly, they were all thinking, wait a minute, if the king can just seize their money because of a political disagreement, he can seize our money too. A fundamental bond of trust was just broken. Okay, so a fascinating drama in a faraway kingdom. But what in the world does any of this have to do with you? Well, that's where Chapter 4 comes in, the impact on you. Because believe me, when cracks appear in the castle wall, they eventually spread all the way to the village square. It all happens because of this dangerous feedback loop. See, when foreign countries sell treasuries, they're also selling U.S. dollars. The more dollars flood the market, the weaker the dollar gets. A weaker dollar then makes U.S. investments less attractive to foreigners, which encourages, you guessed it, even more selling. One small crack can start a chain reaction that spreads incredibly fast. And the cost of that whole spiral? It gets paid by you. A weaker dollar means everything we import, from your phone to your coffee, gets more expensive. We call that inflation. And to convince people to keep buying its treasuries, the U.S. government has to offer higher interest rates. Since those rates are the foundation for all other loans, that means higher mortgage rates, higher car loan rates, and higher credit card rates for everybody. This all sounds pretty serious, doesn't it? Which, of course, leads us to the climax of our story in Chapter 5. Is the king about to be dethroned? Is his long reign really, truly coming to an end?
Well, there's a huge debate about this. On one side, the loyalists say the king is perfectly safe. They argue that whenever there's a crisis, everyone still runs to U.S. treasuries for safety. There just isn't another alternative that's as big or as stable. But the rebels on the other side say the throne is incredibly shaky. They say trust has been permanently broken, and that things like this can unravel much, much faster than anyone thinks. Just ask MySpace or BlackBerry.
So, look, is the castle going to completely collapse tomorrow? Probably not. But we absolutely cannot ignore the writing on the wall. The direction of this trend is crystal clear, and for anyone trying to plan for the future, that's what really matters.
So, what's the moral of this whole story? And more importantly, what should you do about it? Well, let's turn to our final and most important chapter, your financial treasure map. Here are 5 key paths on your map. First, think about diversifying beyond King Dollar's kingdom. Look at international assets. Second, consider hard assets like gold. It's what the central banks themselves are buying. Third, it might be time to rethink your bond strategy. Fourth, look for businesses that are so strong they can raise prices without losing customers. And finally, the most important step of all, stay informed and be ready to adapt your map as the world changes. Because at the end of the day, listening to the story is one thing, but you have to remember that knowledge without action, well, it's just entertainment. Your financial future doesn't need a spectator. It needs a strategist. So we'll leave you with this one final thought. The signals coming from the kingdom are clear. The trends are visible. The data's all there. The smart money is already making its move. The only question left is the one you have to ask yourself. Will you act on it?